Hey, welcome back. In this video, I'm going to be discussing the TTM Squeeze indicator. We're going to be looking at a version of this indicator that's written in PineScript on the TradingView platform, and then we're going to take that code and translate that into Python and use it to scan for stocks that are about to take off. So if you like the content on this channel, subscribe and like this video, and let's go ahead and get started. So a couple of weeks ago, I made this video called Finding Breakout Candidates with Python and Pandas. And I took a pretty simplistic approach to finding stocks that are trading in a narrow range. And so I just took a percentage and said, oh, if this stock's been trading in this narrow range the past couple of weeks, so say it's a $100 stock and it's been trading between the range of 98 and 100 or 98.5 and 100 the past couple of weeks, then it's been consolidating in a narrow range. And then we looked for stocks that were coming out of that range as potential breakout candidates. One viewer commented, his name is Craig, I believe, that a more sophisticated analysis of consolidation would be to use the TTM Squeeze indicator found on the Thinkorswim platform. The Squeeze indicator finds sections of the Bollinger Bands study which fall inside the Keltner Channels, and when the market finishes a move, the indicator turns off, which corresponds to bands having pushed well outside the range of Keltner's channels. And so he talks about how this is a good way to detect consolidation and then a breakout of that consolidation. So what I thought I'd do for this video, since I've never used this before, that I would research this a little bit and learn how to code it and then demonstrate a new approach on this video. So thank you, Craig, for that comment. I encourage anyone else to make suggestions because a lot of recording these videos is actually me learning myself and trying to communicate it to other people. So part of this is actually me learning in public as I go, and so I'm going to learn about this and share it with everyone else. So let's look at what this indicator is. So I looked this up already. There's a number of pages on it and YouTube videos already, but no one's really talking about how to implement it in Python. And that's where I come into play. So if you look on TradingView, actually, there's some people that use this indicator to trade, I assume, successfully. And so a lot of people seem to like this guy. Lazy Bear writes a lot of scripts that he shares in the PineScript language, which people that use TradingView, some people know it, some people just copy other people's scripts. And by the way, if you want to sign up for TradingView and you've never used it before, then I'll leave a link to sign up for that. It's a really cool charting platform. So I'll leave a link below, so look for that. But here's Lazy Bear's take at the indicator, and I'm going to talk about the example chart he uses here to explain what this is doing. And so you can see there's this indicator down here, and you see this oscillator here. And then if you look closely, you'll see these black crosses and these gray crosses. And what this is doing is when these crosses are black right here, that means the stock is going into a period of low volatility. And so he used Bitcoin as an example, but we're going to use stocks. You can see right here, Bitcoin, and this is back in 2014 when it was about $430 per coin. You see it gets in a very narrow range. So it says black crosses means the squeeze is on. So the Bollinger Bands are actually squeezed really close together. They're inside of these channels called Keltner Channels, and I'll show you what all that looks like in a second. But all it means is that during this period where these crosses are black, there's very low volatility, and it's trading in that very narrow range. And then you see the crosses here eventually turn gray, right? And that means it's entering a period of further more volatility, right? So the squeeze is on, but once the squeeze is off, the Bollinger Bands expand, right? And then so you see this large green candle, and then this oscillator basically shows momentum increasing outside of this narrow range. So it basically explodes out of this range right here, and then you can see this shows momentum gradually increasing, and so you want to place your trade right here as soon as the black cross goes to gray and it exits this narrow range, and then you can ride that momentum there. So you could buy an option there, or you could go long the stock, and then you need to determine your own rules on when to exit that trade. So you might want to here see when there's those green bars are showing increasing momentum, and then you can see when the momentum decreases. And so you could either wait till momentum starts to decrease, or you could wait a little bit longer until it enters another period of low volatility. So maybe you wait all the way until this next period of low volatility and exit the trade there. So there's various ways you can exit the trade. So you can just scalp a little bit of this move, or you can try to ride it longer, but then there's some risk that you give back some of your gains. All right, so let's talk about how do we know when this squeeze happens? So let's talk about the Bollinger Bands and the Keltner Channels. And then, I'll show that visually, and then we'll talk about the PineScript code. So he shared the PineScript code here, and a lot of people don't know PineScript, but I know enough to be able to translate this to Python successfully, and then we can use it ourselves with our own tools if we want to. So earlier today, I wrote some Python code to try to implement this squeeze indicator, and I scanned for stocks where this occurred about a month ago, so like the third week of July. And so I'm going to show an example of what happened on TradingView first, and then we're going to look at the PineScript, and then we're going to translate that to Python. So the example, one example that my screen came up with was Target for the week ending July 24th. And so you'll look here, what I did was add a couple of indicators. So I added the Keltner Channels, and I've also added the Bollinger Bands, and I'll talk about how to construct those in Python in a moment. But visually, you can see there's these bands or envelopes around the price here. So this is the chart of Target stock, and you can see these Bollinger Bands are in this light blue color, and they're kind of expanding and contracting. And then you see this blue channel here, that's actually the Keltner channels. And so if you remember the definition we gave earlier, we want to look for a period where the Bollinger Bands are inside of the Keltner channels. And let's see where that happens. And so if we go down to the prices here, you'll see usually the Bollinger Bands, these light blue ones, are outside of these blue channels here. And let me change the color of that just to make it a little clearer when the Bollinger Bands go inside. So I'm going to change this style to, let's change this to like a red or orange, right? Okay, and I'll do that, okay. And so these red, what we want to see is these red lines go inside and be completely contained inside of these blue lines. And so you'll see Target is kind of an uptrend here, but then you see this part where it's consolidating. You'll see that's the period of low volatility. And you'll see when we zoom in here, eventually there's a period where these red lines here, they're contained within the blue lines, right? And so this is the period of low volatility. And then you see the oscillator here at the bottom that's in Lazy Bear script. There's these gray pluses, and then it becomes these black crosses here when it's a period of low volatility, right? And then eventually it becomes gray here around July 24th. And you'll see that the red lines, the Bollinger Bands, are contained within the Keltner's channels, and then they break out, right? And then so this period, July 24th, is when we're saying the volatility is increasing and we're expecting a large momentum move. And you see these green bars show that momentum, and that's using a momentum indicator. And there's a variety of momentum indicators that people use to show this oscillator. And so there's an ADX indicator, but there's also, I believe, a Lazy Bear used some linear regression to determine the momentum of the move out. So it moves out of this channel, and you can see Target goes from around 122 a share right here, and then closes above 150. So there's a huge momentum move coming out of that squeeze. So it's squeezing, right? It's in this narrow volatility range, and then we expect increased volatility, and it takes off, and that's like a 25% gain, I think, that happened in Target just in the last month, which is a great move. So that's what we're looking at visually. Now let's talk about the algorithm and coding this thing out. So as usual, I have a new Visual Studio Code editor open, and we're going to build this from scratch. I'm going to create a new folder and open it. So I'm going to click Open Folder, and I'll create a new folder called Squeeze, and we'll open that up. we'll create a couple of files. I'm going to call one snapshot.py because we're going to snapshot some price data again. I'm going to create another file called squeeze.py, which will contain our code for scanning for these squeezes. And then we're going to also we'll just create a quick requirements.txt, even though we don't need many requirements here. So I'm not going to use TAlib here. I'm just going to use Pandas on its own. And so all we really need is Pandas. And I'm going to also use Plotly so that we can draw our own charts real quick and so that we can visually see that what we're doing is correct. So we'll do that. And so I'm going to go to snapshot.py first, and I'm going to import OS. And then I'm going to create a new folder for our data sets. So I'm going to call a folder datasets. And I'm going to go back to our GitHub at Hacking the Markets. And I'm just going to get the list of symbols that I need. And so we have this repository called datasets. And I'll also save this dataset in this repository when I push it later. And I just like to have a place with my S&P 500 tickers, and that'll just be our universe of stocks. If you want to put a giant list of like every stock, like the Russell 2000 or any other stocks, you can feel free to add those symbols there. So I have this dataset that just has some stock symbols. So I'm going to copy those symbols, and I'm just going to create a symbols.csv. And this could really just be a text file because we're not really putting the company name or anything else in here. And so what we're going to do first is use the yfinance package, which reminds me, I also am going to use the yfinance package, and we're going to install these requirements. And so I'm going to go to snapshot.py. I'm just going to run it real quick so that it brings up my virtual environment. And I'm going to do pip install -r requirements text, or you can install them individually. So you just need to pip install Pandas, Plotly, and yfinance, and you'll have all the dependencies. So now in my snapshot.py, I'm going to import yfinance. So I'll import yfinance as yf. And then all I'm going to do is open this symbols.csv and just loop through all of them, and then fetch the daily time frame data from Yahoo Finance. So I'm going to do with open symbols.csv as f. So I'm going to get a file handle to symbols.csv, and then I'll do lines equals f.read.splitlines. So I'm basically just reading in the contents of the file and splitting on the line breaks. So each symbol will be on its own line, and then I'll just do for symbol in lines. So we're looping through those symbols, and let's print the symbol and make sure everything's working so far. Print them out. We're printing out all the stock symbols. And then from yfinance, I've used this in many videos, so I'm not going to go over it again. All we need is to do yf dot, and it has a download function that we can call, and we just need to give it a symbol. So I'm not going to download all of the data for all of history. I don't want to spend that much time downloading the data, and I'm not running a backtest. I'm just going to get more recent data and show you how to implement this algorithm. And so the first thing we'll do is download some data from a couple months ago. And so I'm going to do start. We're going to give it a start date. And so I'll do 2020 0501, and let's say an end date of 2020. Let's just do the end of June. So we'll get some data for May and June. We'll use it to build our scanner, make sure it works as expected, and we'll see what the results would have been for stocks that it finds. We'll see what the results would have been for July and August. And then once we're satisfied, then we'll use this scanner again for the most recent snapshot of data for today is August 22nd. So we'll try to get some data up till Friday's close, and then try to find some ideas for actionable ideas for next week or the next few weeks after that. So I'm going to download the data for May and June, and then we're going to write all that data to a CSV on the disk. So I'll do data. So this downloads this data, closing data to a data frame for each symbol, and we'll have a CSV file for each of those symbols. And so we'll save that to datasets / and then we're going to leave a formatter, and then we're going to use the symbol as the file name. So I'll do to CSV symbol, and then we'll do .format symbol. And I'll run that again, and we should see our data start downloading. So I run that, and you see how it's showing a progress bar, and it's looping through all the symbols in the S&P 500. And if I open my datasets directory, you'll see data is flowing in, and I'm going to let it run for a minute. So while that's running, we can go ahead and start on our squeeze.py to start implementing the algorithm here for the TTM squeeze indicator. And so in this file, I'm going to import OS and pandas we're going to need. And I'm also going to import this plotly, and I'll wait on that since we're not going to do any graphing yet. Okay, and I'm going to basically loop through all of the files in this datasets directory, and then we're going to scan the price data for this TTM squeeze indicator. So let's look at the PineScript version of the indicator and translate it line by line. And it's actually not that much code. So if I scroll down here, it says, this is a derivative of John Carter's TTM Squeeze volatility indicator, as discussed in his book, Mastering the Trade, Chapter 11. Black crosses on the midline show that the market just entered a squeeze. Bollinger Bands are within the Keltner Channels. This signifies low volatility and the market preparing itself for an explosive move up or down. Gray crosses signify the squeeze release, which we just talked about. So we need to calculate Bollinger Bands and we need to calculate Keltner's channels. So if you look down here at the implementation, he stores a few variables that you can customize, indicating the period for the Bollinger Band calculation, and then the period for the KC, the Keltner channel calculation, and there's this multiplier. So these are really just variables that we need. And then we also just need to calculate the Bollinger Bands, so the upper Bollinger Band and the lower Bollinger Band, and the upper Keltner channel and the lower Keltner channel. And so let's look at the definition of Bollinger Bands, and some of you probably know this already. So if we look at Investopedia, there's 3 lines. There's a middle band, which is just a simple moving average of our stock price. We know how to calculate a simple moving average. And then the upper and lower bands are typically 2 standard deviations plus or minus from the 20-day simple moving average, right? So all we need to do is find a standard deviation and a simple moving average. And these functions are already built into Pandas, so we don't need TALib or anything extra to do that. And so all Bollinger Bands are this envelope around the price. This middle line is a moving average of that price. And this top band is 2 standard deviations away from the moving average, and then this bottom band is 2 standard deviations below. And there's multiple ways of trading Bollinger Bands. Some people say when it hits the upper Bollinger Band that you're expecting a reversion to the mean. So you're saying, oh, this is too many standard deviations. This is too far away from the mean, so we expect a mean reversal. And so this is far away from the moving average, and we expect a return to the mean. So you would short up here, or let's say it crashes down below the moving average and gets extended further than usual away from the moving average. You expect it to return to the moving average, and so you buy the bottom band here. Now, the other way to approach this is saying that, oh, this went and pierced above the upper Bollinger Band, and so that means it's strong momentum and you want to ride the upper Bollinger Band. So like right here, it hit the upper Bollinger Band, and you could actually place a trade on this and say that indicates strong momentum, and you're riding this move right here along the top of the upper Bollinger Band. So that's a description of the Bollinger Band calculation. This is the visual and a couple of ways to trade that. So let's just translate that description to Python code in Pandas. And if we go back to our snapshot here, you'll see our snapshot is done. And so we can start reading in all these files and calculating the upper and lower Bollinger Bands. So what I'm going to do is loop through all these files that I have in datasets. So I'll say for file name in os.list directory. So we're listing all the files in the datasets directory. So I'll list the files in the datasets directory like that. And let's print the file name. Let's make sure this works first. And it's finding our files. I run the program, and it's finding all of my CSV files, which is great. And so from the file name, I can extract the symbol. So I can do symbol equals file name dot split, and I'll split it on the dot. And then the first token of that will be the symbol. So I'll just split it out and get the 0th index of that list, and we'll have the symbol by itself. So I'll comment out the file name, and we'll just print the symbol we're processing as we go. And so now I'll use Pandas, and I'll read this CSV file into a data frame. So I'll do Pandas dot read CSV, and I'll get datasets slash, and then I'll use the file name I'm on. So I'll read the file name I'm on into a data frame, and if I print the data frame, you should see price data in these Pandas data frames. So lots of price data printing out, and you see we have data that stops at June 29th because we only downloaded May and June data. One thing I'll also do is add a little bit of error handling because some people ran into some empty data frames on some of these symbols. And so we can do if df.empty. We'll do continue, and basically says if there's no data in the CSV, go to the next file and just keep going. So we mentioned that the Bollinger Band here, this middle line, is based on just a simple moving average. The 20-day simple moving average is a common default. So let's calculate the 20-day simple moving average. So to do that, I'm going to say the data frames 20 SMA. So we'll give it a column name of 20 SMA, and we'll show what the 20 SMA is on all of these. And then we'll say, we'll use the closing price. So the headings are close here. So the Pandas data frame will get the closing price. And for each of these closing prices, we'll have another column here over to the right. That's the 20 SMA. And that's just going to be different. It will have different values for the simple moving average as we go. So we'll do df.close. And then there's this function called rolling that we can use. And we just give it a window size of 20 so that it's doing a rolling 20-day simple moving average. And we'll do the mean. So it's like a rolling mean. So, you know, the price, the SMA for this 40th row will be the mean of the previous 20. And then the SMA for the 39th row here will be the mean of the previous 20 rows before that, right? Very simple. And so now when I print out my DF again, so I'll move my print DF, you should see that we have a simple moving average 20 column for all of these, right? And so let's show one symbol just for an example. So I'll do symbols equals apple, and I'll say if symbol in symbols print df. So we'll just print one of them for apple, just so that we can isolate one and look at it as we go. All right, and I won't print the symbol there. All right. So I'm going to run that, and I'll just print apple on its own, right? And you'll see the prices. You'll see there's no 20 SMA until 20 days pass, right? So it's not a number. And then the first one here is 309, and that's the average of these 20 beforehand, right? And so the 40th here, you see the average price was 346. Easy, right? Okay, so we have a 20-day SMA. And then now we just need to calculate a standard deviation, because the upper band is going to be 2 standard deviations above the simple moving average, and then the lower Bollinger Band is just 2 standard deviations below the simple moving average. And so let's calculate that standard deviation first. So we'll say the data frame's standard deviation is equal to the close, and this is just going to be another rolling value, window equals 20. And this will use this function standard deviation, right? And if we do that and run it, you'll see where we get a standard deviation, and it looks like it's 13 here, right? 13, 14, so forth. So this is what we're going to use to calculate those upper and lower Bollinger Bands. And so now all we have to do is say that the lower band is the 20-day simple moving average plus 2 times the standard deviation. So we'll do plus 2 times our data frame's standard deviation that we just calculated. And then we'll say the upper band is equal to df 20 SMA minus 2 times the standard deviation. And then we'll have columns for the upper and lower Bollinger Band. And that's very simple as well. And if I run that again, you'll see that this price was 346. If you add 2 times the standard deviation, so that's like 27.5, you get this price of 373. And then if you subtract, 27.5-ish from there, you get this price of 318, 321. And that's our upper band and our lower band. And let's just graph that out to show what it looks like. So let's import our Plotly library and show that visually. So we're going to use Plotly candlestick charts in Python. It's very easy to create a candlestick chart using the Plotly library. And so it'll look like this. And so if you look, all we have to do is import Plotly graph objects as GO. And then we want to read a CSV, which we've already done. And we just need to pass it the date, open, high, low, and close, which we have in a data frame. So we give it the data frame, and it'll create this nice candlestick chart for us. So let's copy this code and show the figure. So we'll say figure equals go figure, data equals, and then this is just a candlestick. And then we need a date, and it's called date already. So it's actually working pretty conveniently already. But our symbols are called, our columns are called open, high, low, and close, just like that. So I'll do that. And we need to just get Apple. We're looping through all of them right now. So let's store the Apple one separately. So let's create a quick variable just to store the Apple data frame on its own and chart it by itself, just so that we can look at it. So if symbol and symbols. So if we know the symbol is Apple, let's just say Apple data frame equals df, right? And then so let's, instead of df here, I'll do Apple df, Apple df. All right, let's run this and see if we get a nice chart. So I'm going to chart that. You see I have the chart of Apple. So our chart looks good. We have a candlestick chart. We have this range slider, which is a little funky. So we're going to turn that range slider off. And also you see we have these gaps where these gaps here, right? And that's actually the weekends. We have no prices for that. So we need a couple of settings to configure this how we want. So we're going to turn off this weekend so that it compresses together nicely. And also we need to add the Bollinger Bands to this chart. So let me show you how to do that. So first of all, this data is actually a list of charts or figures to put on top of this chart. So I'm going to take this first one, which is the candlestick portion, and just store it in its own variable. And I'm just going to put this on one line. So this just refers to the candlestick object here. And so I'm going to put this on its own line, and then we're going to create one for the Bollinger Bands as well, and then put that in its own object. So candlestick equals go graph object candlestick, and we're going to add that candlestick to the figure. But we can also put additional figures in this list. And so I'm going to create one for the upper and lower Bollinger Band. So I'm going to say upper band equals go.scatter. So we need a scatter object. And then we're going to do lower band equals go.scatter. And we're going to append those to this figure. So I'm going to do upper band and lower band here, right? Okay, and then what does this look like? How do we use the scatter object? I'm going to do x equals Apple df date, y equals Apple df upper band, and then I can give it a label if I want, so I can say upper Bollinger Band, right? Do that, and then actually I'm just going to copy this one since it's almost the same. So do that, and then for our lower band, we're just going to do lower band equals that, and then I'll use our lower band that we calculated and label it lower band. And then let's see if we append it there. And then also I'm configuring a couple options on this figure. I'm going to say fig.layout.x-axis.type equals category. And this is the magic. This, just type that in, and that will get rid of the weekends where there's no data. And then I can also do fig.layout. I'm not quite sure why that works, but that's what I found. So fig.layout.x-axis.range slider. We're going to turn off the range slider because it makes our behavior a little weird. So I'm going to do that. And now if I run it, let's see what we get on our chart. And you can see I named it lower and upper band, so there's an error there. I'm going to change it to include the underscore. Try it one more time. And we run it. So you see we don't have any Bollinger Bands for the first 20 days here, the first 20 candles, but then you start seeing these bands, and then we have the upper band. And it looks like my labels are misconfigured here, so I'm going to do this one more time. I'm going to say that the lower band, okay, so I did the lower band first. The lower band is minus standard two standard deviations, and the upper band is plus 2 standard deviations, which is good. And then I'm also going to add some color here, so I can say line equals, and I give it a dictionary, and we can say color red, and I'll do that twice. So we're going to put these in red. Okay, if I do that, run it, we get our chart again, and you see that these are the Bollinger Bands for Apple stock. So you can see in this case, Apple never reverted to the mean, and so this was a case of a stock with very strong upward momentum, and it did not pay to bet against Apple or short Apple, thinking it would revert back to the moving average. So that's it for the Bollinger Bands part. Now we just have to do the Keltner channel part. So I'm going to actually download a little larger of a data set because I would like to show the band, a little bit more visuals of these bands here. So I'm going to run the snapshot program again and go all the way back to January. So I'm running that now, and I'm going to let that download in the background. And so we'll go back to squeeze.py, and let's look at the calculation for the Keltner channels now. So I'll go back to this description. So under our squeeze momentum PineScript here, we have this upper Keltner channel and lower Keltner channel calculation. It looks like it just uses a moving average plus a range MA times a. So if you look here, it looks like it calculates. So if you look here, he calculates the upper and lower Keltner channels, and it looks like it's just another moving average plus the SMA of the true range. So it uses the ATR, and then it just uses another multiplier. So this is actually a very easy calculation as well. So again, let's look at the definition of Keltner channels. So we'll Google that up. So I'll use this version from stockcharts.com, and then here's the calculation. So it says the middle line is the 20-day exponential moving average. In the other version, I believe he's using just the simple moving average. So he's using the SMA here. Some people use the EMA. We'll just translate using the simple moving average since that's what Lazy Bear is using, and we're trying to translate that. So we need a middle line that's a moving average. The upper channel line is the 20-day EMA plus 2 times the ATR 10, and the lower channel line is the 20-day EMA minus 2 times the ATR 10, right? And so there's those ATR lines. And so this multiplier he makes variable in the script. And so if you look back in TradingView here, he makes these multipliers configurable, so the default is 1.5 in his case. This article uses 2 as a default, so you can kind of decide what your settings here. Same way if you're doing an indicator like RSI or MACD, you have some customization of the moving average you're using, the period you're using, and what level indicates overbought and oversold, and so forth. So here they use an EMA with 2 times the ATR 10. And then here, Lazy Bear is using 1.5 as the default setting. But yeah, the basic idea is instead of the moving average plus or minus 2 standard deviations, you're using plus or minus 2 times the ATR. So let's do that calculation. So let's go ahead and get this PineScript code for the Keltner channels, and let's translate that into Python. So I'll copy this here, and then we'll just get rid of it as we go. So we just need a simple moving average of the source, which is the close, and the length of the Keltner channel, which we're using 20. And so we already have the 20-day SMA here, and he's using the 20 SMA for the Keltner channels as well. So we already have that column, right? The range we're just saying is the high minus the low. And so I can do that. So I'm going to say the DF's true range is equal to the absolute value of the data frame's high minus the low. So we're subtracting the high and the low, and whatever the absolute value of that. So if it's -5, it would just be 5, right? So we're getting that range. So I'll do high minus low for the data frame, and then I'll calculate the average true range, the ATR, and I'll say that's equal to the true range, and that's just a rolling mean again. And so I'll just say window equals 20, and then calculate this mean. and that'll be the ATR. And so the upper Keltner channel is just the moving average portion, this 20 SMA. So we'll just say that's the DF 20 SMA plus range MA times the Keltner channel multiplier. And he's using 1.5 as the default, so we'll use 1.5 as the default. And this range MA is what we're calling the ATR, this true range mean right here. And so I'm going to say the DF ATR times 1.5 and times 1.5 there. So we're going to have the upper channel is the 20 SMA plus 1.5 times the ATR, and the lower Keltner channel is the 20 SMA minus 1.5 times that ATR. And then so I'm going to store this also in our data frame, and we'll call it the lower Keltner. And then we'll call this one the upper Keltner, right? So we'll do that. And in the same way we added the upper and lower band here, we're just going to add this to the figure. So we'll do upper Keltner, the lower Keltner, and swap these out. Keltner channel. We'll put these in a different color. So I'll do blue. And then lower Keltner channel. Upper band, lower band. So that'll be upper Keltner here and lower Keltner there. Okay, so we should have lines for the upper and lower Keltner channels, upper and lower Bollinger Bands, and we're adding these to our figure. So I'm scanning through, calculating these upper and lower bands, these upper and lower Keltners, and I'm going to run it and show what it looks like on Apple stock here. And so you can see this is for the whole year now because I downloaded a newer data set. We have our blue lines, which are upper and lower Keltner channels, and our red lines, which are upper and lower Bollinger Bands. And you can see in the case of Apple stock, this indicator never actually triggered. There wasn't this period of low volatility. Apple went straight down in March and then bounced back in a V-shaped reversal coming off of the COVID crash there. So let's look for another stock where we can show this actually happening. So to do that, let's actually just finish out our scanner. So I'm going to comment out this chart for a minute, and let's see if we can finish up our scanner here. So I'll comment this part and this part out. So we're already doing our calculations for our upper and lower Bollinger Bands, our upper and lower Keltner channels. And so let's define a little inner function here called in_squeeze. So I'll define a function called in_squeeze and give it a data frame. And when is it in the squeeze? We said whenever the Bollinger Band, the upper and lower Bollinger Bands are completely contained within the Keltner channel. So the upper Bollinger Band needs to be less than the upper Keltner channel, and the lower Bollinger Band needs to be greater than the lower Keltner channel. So in squeeze, I'm going to return true if the lower band, so the lower band, Bollinger Band, is greater than the lower Keltner channel, DF, Keltner lower, and the upper band is less than the upper Keltner channel, right? It's contained between, so less than the Keltner, upper Keltner. All right, and I'll call that lower Keltner. Then we know we're in the squeeze, right? So I'll use Pandas to apply this function to a new column. So I'm going to do data frame. I'm going to create a new column called squeeze on, and I'll do df.apply, and basically I can apply this function to other columns in the data frame. So I'll do df.apply in squeeze, which will actually call this function and look at the upper and lower Bollinger Bands and the upper and lower Keltner channels, and it'll return a true or false value. And I do axis equals 1. And you'll see what this does. So I'm going to run this, and let's see if the last row of some of these are in a squeeze on position. So I'll say if df.iloc, we can use the last function or the tail function, but I'm going to use iloc, and I can do -1, and this will get us the last row of the data frame, so the very last day. And so we'll look at the last row using negative indexing, and then squeeze on. So we'll access this new squeeze on column. So if the last row is squeeze on, we can print that some symbol is in the squeeze. So I'll format that and put the symbol. So I run that to see who's in the squeeze right now. And I should be getting some results, but I'm not. So that must mean I have a bug. So I'm going to look back and see this condition was never true, apparently. So lower band greater. It looks like I made the same mistake here where I reversed my signs again. So the lower Keltner is actually minus, and I'm not sure why I keep doing that. So the upper, this is minus the ATR times 1.50, the lower, and then the upper is the plus, right? And so if I run this again, let's see if we get some values. So squeeze is on for a variety of stocks, and let's see if any of these jump out at us. So I saw Target, I think I saw Visa to start out with. So let's look at Visa, and I think I saw AMD. And so I saw Visa and AMD. So let's look at those that were in the squeeze for June 30th. And so if I look at a couple of charts here, or let's use our graph here. So we'll say let's get the AMD chart. So we'll say if symbol equals AMD, then we'll just store it in that data frame. I know it's called Apple, but whatever. I don't want to reconfigure this. So I'm going to do that, and let's just isolate AMD to see it in the squeeze on June 30th. So I'm going to run this, and we'll run Visa, maybe a couple more. Okay, so I run that, and that should be the AMD chart. And so if you look here, it's around 50 to 55 here. It looks like there's a period of high volatility here. The red is the Bollinger Bands, and you can see they're way outside of the Keltner channels during this period of volatility, but then you can see they start to squeeze inwards, and you see these Bollinger Bands, these red lines, are now inside of these blue lines. So we're calling this the period of low volatility, and that there's going to be eventually a point where this breaks out of this low volatility range. And then indeed, I believe if you look later, let's pull up the chart of AMD after June 30th, right? So if I look at AMD and pull that chart up, you'll see if you look at June 30th here, right? And this is the same chart here to verify that our logic is good, that it starts squeezing here in June. So there's this period in June here of low volatility where our Bollinger Bands come inside of this Keltner channel, and then you can see the volatility starts to expand. These Bollinger Bands come out of that contraction, and then you see AMD pops from 53 to 85, like very quickly, right? And so we capture it coming out of this low volatility to a period of high volatility, right? And so, yeah, this successfully scanned, and it looks like it stayed. It stayed in the channel a little bit longer, and you'll notice it actually was not very volatile for another week or two after that. So it didn't really get any of this strong momentum on this histogram here until about a couple weeks later, and that's when the real move happened. But you see how it's in this narrow range, and then it breaks out. So it looks like our indicator is working pretty well. And if we tried the same thing, let's see for Visa, let's see what's going on there. So we can run this for Visa and see that it's in the squeeze on June 30th. And let's see what that looks like. So you see, again, Visa, Bollinger Bands outside of Keltner channels, and then they start to it starts to consolidate right here. So you see these red lines inside right here for Visa. And if I looked at that, for example, you can see June 30th for Visa, and you see where it's still actually in this narrow range. So eventually this is going to get more volatile and have some type of breakout. So instead of showing something that's still in a squeeze, I want to find something that was in a squeeze a couple of days ago and then is coming out of the squeeze, because that's the trade I actually want to make. So let's adjust this. Instead of just finding what is squeeze on, we can see what was in squeeze on a couple days ago, let's say 3 days ago or 2 days ago, and then the last row, let's say, and not squeeze on So let's get the squeeze on. We want to find something that was squeeze on a few days ago and then not squeeze on the last day. So not squeeze on, right? And so we'll filter that down. That should show less results. Oh, and I'll change this text to say is coming out of the squeeze, right? And I'll run that. And I'll do yesterday and today. So I'll run that, find something that was squeeze on and then is no longer squeeze on. So it looks like MCO and ROL, and I'll ignore that error because I commented out that data frame. That's fine. So let's look at MCO. So if we look at this MCO here, this Moody's Corp, there's June 30th. You can see that it was in the squeeze here, and then it was starting to come out, right? And then also let's compare. I actually put in the PineScript code for Lazy Bear script, and you can see that our Python function is functioning fairly similarly because these black crosses here are at this June 30th range, and then it becomes gray here, and it's coming out of the squeeze, right? And then let's do another example. Let's see if we can find one that really moved. ROL here, you can see it was in the squeeze at the end of June here. So at the bottom, you see we have the black crosses, and we also have this narrow consolidation. And then you see that it comes out of the squeeze, and this one actually had a nice move from low 40s to mid 50s here. So this was a good run here. So it's upward trending. There was this consolidation period, and then it continued moving up. So another good example right there. So let's fast forward to the present day, and let's see if we can use this to find some good ideas for next week. So I'm going to get another snapshot here, going all the way until 8/21 or 8/22. So I'll get the August data as well. And let's run this. So I let that run, and now I have the data up until Friday or yesterday, and I'm actually looking to allocate some money for next week. So let's see if we find any ideas, and if I like any of them, I'm going to make some buys on Monday. So let's give this a shot. I'm going to run the squeeze.py again and see what comes up. And it looks like it's flagging quite a few of them coming out of consolidation. And that kind of makes sense, I believe, based on how the SPY has been acting recently. And let's see if any of these names jump out at us. Looks like Google, Johnson & Johnson are pretty big names. So yeah, let's see what Google is doing. So let's use our own chart for a minute. So let's let this run. And I'll say if symbol equals Google. Let's chart what Google looks like. I'm going to have to let this run again. So I'm going to let this figure generate real quick. We'll look at Google, and then we'll look at a few more symbols that we recognize. And so, yeah, you can see Google here actually looks pretty good to me. You see it had this nice upward trend coming off the bottom in March, and then recently the Bollinger Bands here are squeezing here, and it looks like it's just now coming out of that, and so we're expecting a big move. And so I actually like Google, and I might buy that here. So the all-time high looks like it was just exceeded, and then we have this narrow range after an uptrend. So Google looks like it's going to go to more new all-time highs. So that looks like a good one. If we look here, we also have, what else do we have? I think I saw Visa again. So let's look at Visa. So we'll pull up Visa. So if I look at Visa here, I'll look at it. And you'll see, and that one looks really good as well. I'm interested, and I will buy Visa. Had its all-time high in February, fell off, uptrended, and it's been in this still consolidating. This came up in the, I think a month ago whenever we were showing this scan previously. So it's still consolidating, and it's just now coming out. And so I would actually buy Visa here, expecting it to move to all-time high. So Visa and Google, I think, would be good candidates to buy next week. And let's also look, I believe Johnson & Johnson is probably one to look at. So if we look here at Johnson & Johnson, V-shape, but then tight consolidation here, and looks like those green candles, it's just now breaking out again. And so I would say Johnson & Johnson looks like it is or is about to go to all-time highs and surpass it, probably due to vaccine news and other things like that. But also they have a whole ton of products. So Johnson & Johnson, probably a good stock to buy as well. And I believe I saw Walgreens, which seems kind of weird. I probably wouldn't buy Walgreens. So let's see why it's in there. So I'll see WBA, Walgreens Boot Alliance. Now this one is actually a good example of the opposite. So this could be used for going long or short. And so it looks like Walgreens actually has been downtrending, right? And then consolidated here at the end. And you see this histogram here, the bar is actually red, indicating downward momentum. So this one is a case of a stock that's consolidating at the lows in a downtrend and looks like it's about to break lower. So if you're into shorting stocks, Walgreens could be a good example of a stock to short. And so, yeah, that seems pretty good. Twitter, I haven't had good luck with that. I've got a hard time about that because I keep expecting that to be a stock that eventually runs to all-time highs, but it's been stuck there in the 20s and 30s for years now. eBay, let's look at eBay. That came up in our scan. And eBay, I haven't used eBay in a long time, but actually it looks really good. Really sharp uptrend here, and then it's had this period of low volatility, and it looks like it's busting out again. And so eBay actually looks like it's going to go higher. So we'll see what happens. So let's write down those symbols, and let's see if there's any merit to this TTM squeeze indicator. So let's think about eBay, Google, Visa, Johnson & Johnson. And yeah, any other names on this list that you're interested in looking at, you can try out this scanner. And I think this is working pretty well. And I don't really give individual stock picking advice on this channel. I mostly talk about programming, but I'm looking to invest some money, and I'll probably actually I would buy those three stocks, Google, Johnson & Johnson, and Visa myself, and I probably actually will allocate some money to those individual symbols. Those are solid large cap companies, so I don't view that as a risky investment, and also they look like they're reaching new all-time highs, so that's a good sign. And also the S&P 500 just closed at an all-time high as well, so I'm personally looking to put money on the long side because I like 52-week highs, and then it gives me an easy place to place a stop loss if stocks begin to break down again. I have an easy place to cut my losses. So that's what I have for the TTM squeeze indicator. We learned a good amount about PineScript, about the visual representation of the TTM squeeze indicator. We learned to look at the Bollinger Bands and how to calculate those in Python using Pandas, and also how to calculate the upper and lower Keltner channels as well, and how those are used individually, but also how they're used as a whole in this TTM squeeze indicator to detect periods of low volatility and detect when stock is breaking out of this low volatility into a period of high volatility and expecting continued momentum or a continued uptrend. So that's it. I hope you learned a little bit more about the squeeze indicator. Leave a comment below if you have any suggestions. This is the first time I've ever seen it or implemented it, so let me know if there's any ways to improve upon this approach here, or if I missed anything, and I'll try to address it in a follow-up video. I'm going to push the source code up here to github.com/hackingthemarkets. You can download it, play around with it, submit a pull request if you want to contribute some improvements, and also leave a couple links if you want to sign up for TradingView or Binance or any of these other services that I've talked about. It helps support the channel. That's it for now. Like and subscribe, follow me on Twitter, all that good stuff, and I'll see you around in the next video. Thanks a lot.